Hi there, it's Matt Samet, Chief Investment Strategist at Fortress Financial, and I'm here to talk to you about real estate. And sometimes I do these videos and I shake my head and say, I hate being the bearer of bad news, because real estate has been great news, especially here in Canada, places like Australia, England. They've had booming real estate markets. But people got to be realistic. Post-boom, you always get a correction. Sometimes you get a crash. Now, the reason we think this correction could be fairly significant in a lot of cities, especially if you look at it more coastal cities like New York, San Francisco, Vancouver. Toronto's a phenomenon. It's not a coastal city, but it has had a huge boom. Singapore, just there's a number of places, and we list them here. LA, Miami, Seattle, all these, London, Zurich, Geneva, these have all boomed, these markets. And everyone says, well, that's great. You know, foreign monies have probably gone there, which they have, and helped push them up. And interest rates are so low, which has also driven up the market. Now, what's the problem with that? Number one, outstanding debt is monstrous, and that's dangerous because at some point you have to see the scale of growth decline, if not overall a decrease in it, and you decrease it by writing off debt, and that happens during bad times. Also, foreign markets, when money leaves countries, it tends to pull itself back when their local country starts to get in trouble, i.e. their local businesses are in trouble. And we're starting to see that now. Look at China as probably the biggest example. Their growth went from double digits to today's 6.8%. Sounds awesome, 6.8, but you know what? For China, it's the worst we've seen in decades. And it continues to decrease month after month, as well as their manufacturing stats are continually in contraction. So a lot of Chinese money will be repatriated, or at least less and less will stop flowing outside of their country. And what ends up happening here? What you generally see in booms is you get a retracement in a crash, especially if it's a real bubble, to the beginning of where the bubble started. And I looked at it from the perspective of where would that be in Canada on average? Well, back in 2001, relative to today's prices, we are 143% higher. That means it would have to correct 60% to get back to where it started. And if you look at history, if you're a student of history, bubbles burst that way. They go too far on the upside, and the pendulum swings too far on the downside. Because what happens? Fear kicks in. And especially when you have too few people owning too few assets, and the upper tier, the elite, let's call it, who have most of the assets and money, will be forced to liquidate real estate if we start seeing a rollover in the economy and asset prices. So that is a spiral effect. All of a sudden they sell their real estate, others selling it, and they're selling another one. And next thing you know, you get tons of supply and no demand. And that's when you get a real problem. Are we there? No, not yet, but we're sure getting closer. And we've been warned by the Bank of Canada, by CMHC in Canada, that's Canada Housing Mortgage Corporation. The U.S. Number of parties are saying that their bounce from their crash in 2007 to about 12 it bottomed out, and their recent rise has been a small rise relative to where it was at the peak. They think that's over, and that happens a lot of times, that you won't get a straight line down. You get a correction, a rally, then that final correction. In Canada, we haven't actually seen that correction yet, so that's what's scary. The risks are that much more significant. So what do we recommend? If it's secondary properties, if it's commercial properties, consider locking in value while you can. If it's your personal home, it's your personal home. Accept it for what it is. Don't look at it as your asset, but it's your lifestyle. If you're counting on it for your retirement, you better be careful, because again, what booms will always inevitably bust. Hate to be the bearer of bad news, because real estate has been the one great area, but we help people and show you all these stats at Fortress. And we want to coach people not just on the stock markets and bonds and how to invest, but on the overall picture from them, their total assets. So let us help you out. Anyways, all the best, and we'll see you soon.